I would like you to join me in welcoming the head of Marcus, Harit Talwar, and Ainsley Harris from Fast Company magazine to talk with him.
It was the trip to the supermarket that got a lot more expensive. Replacing the garage door that couldn't make up its mind. A new smile for your youngest. And the upgrade that was long overdue. Debt happens. It's how you get out that counts. Pay off credit card debt with a fixed rate, no-fee personal loan. Introducing Marcus by Goldman Sachs. Learn more at marcus.com.
Welcome, Harit. So glad to be here with you today. I think the last time we sat down to talk was just before Marcus launched last fall. Clearly, you've made a lot of progress. You're out of beta, and like everyone else here, I'm looking forward to hearing how things are going. So welcome.
Thank you very much, Ainsley, and great to be here. And thank you and the organizers of Lendit. This has truly become, you see all the halls, the premier event in the industry. So we at Goldman Sachs delighted to be here.
Great. Debt has in recent years become the entry point of choice for launching a consumer finance brand. What in particular about consumer debt was interesting and attractive to Goldman?
Well, at Goldman, we saw that there are consumer pain points in the online lending industry or in the borrowing industry, talking about it from a consumer perspective. And we are very confident we can help. So it's as simple as that. As you know, there are tens of millions of Americans who are paying very, very high interest rates on their credit card. What we perhaps don't sufficiently realize is the stigma they feel around that. You know, if you have a back problem, you talk to your friends about it, maybe more than your friends want you to talk about it. But if you have high card debt, you tend to be embarrassed. Mm-hmm. And it doesn't need to be like that. So we saw that in our research. And we are confident that we can help. So we are a bank, but we don't have any consumer legacy businesses which we've got to worry about conflicts. Mm-hmm. Technology, risk management, analytics is in our DNA. So what we were inspired by was the consumer stories, our capabilities, and how do we do something keeping the consumer at the center. So as you saw in the ads, our proposition is very simple. Yes, debt happens, but it's how you get out that counts. And I think the distinctiveness is frankly in our name. Marcus by Goldman Sachs. So we are a startup, but with 147 years of expertise. And yes, it does help. We have our own balance sheet. So I think that's why we are in this.
So if that's sort of the problem and Marcus is the solution, maybe tell us a little bit more about exactly what Marcus is and what you think gives it an edge. This is a pretty crowded space.
Yes, it's crowded but large. So the product is very simple. It's a 2 to 6 year unsecured personal loan from $3,500 to $30,000. So first of all, this kind of a product in itself is a huge step for Goldman Sachs. But we've packed in, as you said, a lot of edge. We listen to more than 10,000 consumers. And frankly, our product reflects what they want. So what did we hear? In today's day and age, people want value, no gimmicks. So our interest rates tend to be typically 3 to 5% lower than what they would be paying on comparable card debt. 2, people don't like variable rates. This whole notion of introductory rates, go-to rates, anyway the Fed fund rates are going up, credit card rates are going up, they don't like that. So like everyone else, our rates are fixed for the period of the loan. But then we heard more. Consumers are really irritated. And some people have spoken about trust. It's true. But consumers are really irritated about fine print, especially when it comes to fees. So we've taken a very bold stance: no fees ever. No origination fee, no prepayment fee, and no late fee. Then we also heard from consumers that despite all this technology, the product is very straitjacketed, a 3-year loan, a 5-year loan, generally. Whereas consumers don't think like that. They think in terms of, I want $10,000, I want to pay $400 a month, tell me the period of the loan. So the period of the loan in our product is an output. So we heard all this, we've got all this in the product, but what we also heard from the consumers, keep it very simple. So we co-created the site with the consumers. And one of the things which I personally was very surprised, consumers said, no matter how much technology you have, we also want the human touch. So when they call, they don't like machines. Press 1 for this, press 2 for that. So I don't know for sure, but I think we are probably the first major call center which has no IVR machines. Now that does make workflows planning a little more difficult, but when you pick up a loan specialist at Marcus by Goldman Sachs, picks up the phone immediately. And we are picking up phones within 10 seconds despite increasing call volumes. So we did all that. Then when you hear 10,000 people, you hear more. People said, we like to pay on time. But once in a while, stuff happens. So we've got a feature called Defer a Payment, which I do believe we are the only ones in the industry, where if you pay 12 months on time, consecutively, your full payment, you earn a pass. So if something happens and you want to defer a payment, for those 12 months of payments that you have made, you get rewarded, you contact us, and you can defer the payment, and there is no fees or extra interest for that. So if it was a 32-month loan, it becomes a 33-month loan. You still pay only 32 installments, but over a 33-month period. So all these things we put together because of fundamentally 2 reasons, or 2 capabilities. 1, we have new technology, and 2, we have our own balance sheet. So I do think we've been able to add a lot of edge into the product.
I see. In that first phase of launch last fall, you were limiting access to pre-approved customers who were sort of invited to apply. What did you learn through that beta period?
That's true, and it was a fairly animated discussion internally because a lot of people wanted to do a big bang launch. But as a value system, the firm is very focused on consumer experience and execution excellence. So you're right, we initially did a small market entry through the direct mail channel. Knock on wood, it's working well because within 4 months, we are now into aggregator channels, open site, digital marketing, et cetera. But despite all this co-creation and all this research, the very first week, we got tripped a little bit. We sent out the direct mail with invitation codes which were alphanumeric. We thought that was easier rather than just numeric. And when consumers went to a landing page, they got confused, and there was drop-off. Now, fortunately, in today's day and age, you have sophisticated analytical tools. We saw it very, very quickly. We addressed it very, very quickly, and that problem went away. But thank God it was a limited launch and not a big bang, because then we wouldn't have liked that confusion.
Were there any other hiccups or maybe just surprises in terms of how consumers wanted to use the product?
I think not any major hiccups or surprises, but we always expected demand to be robust, and it has been very robust. It has been more robust than we thought.
More robust than you thought. Now that you're out of beta, which channels and acquisition strategies are you finding to be most effective? It's still direct mail?
It is pretty well diversified now. Direct mail is a big channel. We are working with our partners in the aggregator channels. That's a big channel. We've started search, display. There's organic traffic. So it's pretty well spread out across all channels.
You know, many of your competitors have raised staggering amounts of venture capital over the last few years and are spending a lot of it on customer acquisition. You know, is Marcus going to go head to head with them, or have you found ways to be more efficient and get customers at a lower cost?
So, well, good for them. They're raising a lot of money. That's very good for the industry. We are very confident about our customer acquisition plans. I think our product is great, our experience is great, our brand is resonating well. I don't want to jinx anything. It's very early days, but if early days are an indication, we are pretty confident about our customer acquisition and demand. But I think there's a bigger point, and that goes to this changing online landscape, which we've been hearing since yesterday. To us, the big competition is not each other in the industry. It is the consumer inertia. There's no reason why people should be paying such high rates on revolving credit for certain situations. Now, in some situations, it may be valid, but not for all. And I think there's consumer inertia about that. And so the more players there are in the industry, I think it is better for the whole industry. More importantly, it is better for the consumer.
The challenge, I suppose, is finding those consumers that you do want to engage with. So maybe let's talk about the Marcus approach to underwriting. To what extent is the process automated?
So, you can well imagine, given our heritage, we are all over this, and we've spent a lot of time and energy. So it's all programmatic, algorithmic, rules-driven. There is no judgmental underwriting. I have been in the industry for a long time. What we feel really good about is that because we started new, we've been able to combine credit analytics and marketing analytics and financial analytics and digital analytics and operational call center analytics all into one. And we've taken behavioral data, which is what people do, and attitudinal data, why they do what they do, and put it all together. Now, of course, within all regulatory compliance standards, that gives an ability to make the offers more relevant and a more holistic risk management approach. So that's really what we feel quite good about.
When it comes to underwriting data, my understanding is that you are sort of more interested in longitudinal metrics than you are in snapshots. Can you tell us a little bit more about what that actually looks like in practice?
So we are interested in both. But I think the main thing is we've spent a lot of time and money building a data architecture which is easily able to ingest multiple sources and types of data and use it for decision making at the point of decision making. Because it's not that people will create data just because Goldman Sachs wants data, but you have to have an ability to use that data. So the longitudinal is one example where we look not only at the profile, credit bureau profile of a borrower at the point of time, we also look at it over a period of time. We don't just look at credit utilization at a point of time, we look at it over a period of time. Now, a lot of startups, frankly, are doing that, but a lot of large banks are still not having nimble technology platforms to be able to do that. So those are the kinds of things we feel good about because they help serve consumers better.
You mentioned how Marcus is performing versus your expectations before. SoFi in the first year that it offered personal loans, I think booked over $1 billion worth. How is Marcus performing perhaps versus that milestone?
So I'm not going to get trapped into either commenting on anyone else or using their milestones because that's competitive confidential information. I would say, and I feel very concerned not to jinx it, we are feeling pretty good where we are right now. Mm-hmm. We have a long-term view on the business. We are very deliberate on how we are building. The brand is resonating very well. Our direct mail campaign response rates, while they vary by campaign, I think are certainly higher than industry averages. Our share in the aggregator channel, and we've been there for less than 90 days, we feel good about. Social media engagement, posts we have on Facebook and the engagement metrics we see significantly higher, not just in ratios, but even in absolute terms than many others. So we are feeling good about that. We are feeling good about how we are addressing consumer experience, not just in the call center, as you can imagine. We are monitoring continuously the consumer journey to make sure it's easy through the site. It would be foolish for any lender to feel happy about credit in the first 4 months, and I don't want to be foolish, but I think our algorithms are working the way we expect them to. We see the profile difference between what we are booking and what we are not booking. So things going well, but we are exceedingly vigilant and no celebration.
So if we take a step back, what are you and how are you and the parent bank defining success, more long term, I guess?
So the parent firm, all businesses Goldman Sachs does, it takes a long view. We like to define all our businesses, whether it's banking or it's this business, in terms of consumer metrics. Our proposition is to help creditworthy Americans manage debt better. Success would mean that we are doing it for a large number of people over time. I think the second thing, as I spoke about earlier, is we think there is long-term secular growth in this product category, and we would like to play a role in credentializing the product category. And again, beyond specifically this product, this is our first foray into retail, and we want to set standards for what is great customer experience and transparency and simplicity.
A lot of the companies in this competitive set were initially valued as technology companies, but are now sort of trading at multiples more in line with a traditional loan book. Do you and Goldman view Marcus as a technology company?
I'm an employee. We are a business inside a large business. So multiples and valuations not very relevant for us. What I would say is that because we are a startup, we view ourselves like a technology firm. Because we are a bank with a balance sheet, we view ourselves like a bank. I think what's important is that when we put both of those together, it gives us an edge, as we spoke earlier, in helping real consumer needs in a differentiated way. So that's what we think Marcus by Goldman Sachs is.
As this first sort of experiment within Goldman on this retail front, are you finding that you're engaging with other parts of the bank, or is this sort of an experiment that the organization as a whole is taking a look at and learning from? What does that look like to sort of be this innovation center, if that's part of the goal?
Well, this is a real business of the bank and the firm. So we are not a science project.
Yeah.
We are committed to it. There's a lot which we are learning from the firm. There's a lot which we are pushing the frontiers in the firm. I have been advised by the senior levels of the firm that that's what we need to do. We need to have the best of Goldman Sachs, and we need to also make a difference to Goldman Sachs. And who would have thought till last year that there would be millions of pieces of direct mail with Goldman Sachs on it?
That is definitely a big change. I remember in our early conversations, you had a lot to say about the Marcus brand and Marcus culture. I'm curious in what ways Marcus is an echo of Goldman's brand and culture, and in what ways is it distinct?
So I'm sure there are lots of great business people over here, and everybody would agree that ultimately, there are cycles and things change, but talent and culture is really core and foundational. And that is a very deeply held value system in the firm, talent and culture. And it is true for Marcus. We don't compromise on that. Now, in Marcus by Goldman Sachs, we've really built a diverse team. And that's really setting the culture. So we have a third of people who are, from typical consumer finance backgrounds, whether it's banks or startups. We do have a third of people from within the firm, which when I started 18 months ago, I never thought would be there. But a lot of deep talent and a lot of excitement about this new business. We've also got a third of people from a little less traditional, on the one hand, the Googles, Facebooks, Amazons of the world. Then we have from HBO, Nickelodeon, Pepsi, Jockey. So this diverse group working together as one team. And we, as you've seen, on one floor, no assigned seating. Every wall is a whiteboard. So that contributes to a lot of energy. So I would say our culture is defined by our energy and by the zeal of trying to help Americans manage debt. Now, sometimes there's a little bit of chaos. So in some ways, it's different than other parts of the firm that, no one on our floor wears a suit. Mm-hmm. Most people are in jeans. We've requested people not to wear flip-flops. But on the other hand, the firm defines its culture in terms of client centricity, technology, risk management, analytics, thinking like an owner rather than an employee. Those value systems are the same in Marcus by Goldman Sachs or any other business of Goldman Sachs.
And I guess lastly, I think a question I'm sure many here are curious about, is Marcus a first step in a broader portfolio of consumer-facing products that Goldman might offer?
I was hoping you wouldn't ask that. We've just started 4 months ago. Our focus is on making what we've started successful. Having said that, we will continuously evaluate and are evaluating. Our process is, where are consumer pain points? Do we have capabilities to address them well? And based on that evaluation, over time, maybe there will be more products. But I do want to say that while there may be more products, we are truly committed to this mission of helping Americans manage debt better, credit-worthy Americans manage debt better. I think that is not just our role as a company, but the whole industry over here, because I don't want to say anything negative about cards. I have lived in that industry for a large part of my life. Mm-hmm. But there is a segment of people for whom revolving debt with no line of sight on how to reduce debt, we are not serving the consumer well. And 70% of them are not aware. And I think all of us as a group have a higher mission to help over there. And we want to play a role as one of the participants in credentializing that. So yes, we will do more products. We will take that mission in other areas. But we are truly focused on, I think it's really required. And I think that is the changing landscape of our industry, that we will provide better solutions for consumers.
Wonderful. Well, thank you so much for taking some time to talk with us. It's been really great.
Thank you very much.